Hello, dear traders. This is Gabriel here. Welcome back to my channel, Forex.Real.Trader coaching sessions. Yet another video about a very powerful doji pattern that we all know as the hanging man. What is a hanging man, right? Basically, this is a bearish candlestick pattern that appears at the top of an uptrend or a correction as well, right? In which the direction is heading to the downside. It signals a potential reversal, right? And its construction is very simple to identify. It has a real body, small body, and it doesn't matter if it is green or red. I mean, it doesn't matter if we are talking about a bull or a bear candle. Let me show you on our charts how it is identified. I usually search on my charts the pattern, and I just found this one in here, right? This is the hanging man. You can observe that this is a downtrend, okay? And this is the correction, the bull correction. And in the very moment of the end of this correction, this very clear hanging man shows up. We have to determine something in here. When the hanging man appears at the top of a price range like this one, it has to show a long lower wick, right? So you can see here these longer lower wick in here. We have different types of hammers. Some of them are perfect hammers, right? Perfect hammer is the one that doesn't have any upper wick, right? An imperfect hammer is the one with a slightly upper wick in here, right? I repeat, it doesn't matter if it is green, or if it is red, or if it is bull, or if it is bear, right? It doesn't matter. The important thing is to detect the body of the hammer and the size of the wick, right? The size of the wick must be at least twice the size of the real body. So this is, say, for example, 1, and this one has to be at least 2, right? Say 1x, 2x, the size to be a valid hanging man, okay? So let's measure this hanging man here in order to identify its validity. So I can use my crosshair tool. Let's measure the body. The body is the size of 9 pips. So the wick should be at least 18 pips to be valid. In fact, this one's body is wick is 20.9 pips. That is a perfect pattern to be identified. Okay, so what is the next step to do here? This pattern is basically valid because the long wick suggests that the sellers pushed prices lower, but the buyers managed to drive the price back near to the open. However, the failure hold, right, higher levels, and it hints a weakening bullish moment. Okay, so when it is formed, we need to be careful because it's not only the hanging man that determines my entry signal. I need to observe all the reversal signals, right? For instance, RSIs or a divergence in a MACD. Of course, the next candle has to be a strong bear candle engulfing the previous one. So that is a good signal, and we can understand this one in here. For instance, what is the entry point in this very case? So once we wait till the hanging man has formed, so confirm, I am checking my 1 hour time frame, right? This is my time frame, the one that I usually use. I usually use 15 minutes and 1 hour. And in this case, after 1 hour of formation for this hanging man, there was another hour with indecision here, okay? But the next hour confirmed with this very nice bear candle that the direction is somehow entering in a bear position. So what is my next step in here? All right, the next step is basically to place my entry point. So where is my entry point here? So my entry, once this candle has closed, is to be right here in this very position, right? And I'm going to check my ATR. The ATR is 27.6. So I'm going to do the calculation. Remember that in previous videos, I explained how this works with ATR. So I have 28 times 1.5. So it means that my entry and my stop loss is 42 pips. So my stop loss should be around exactly this area of 42 here. So that is my, here, right here is my stop loss, right? So let me mark it as stop loss. So if my stop loss is 42 pips, I remember that this means my stop loss means here 1R. So my take profit has to be 2R. So if my 1R here is 42 pips, so, and I want it twice, okay, so it means what? It means 84 pips my take profit. So let's see here in what instance I have 84 pips. I check from my entry point, right? And I hit it. Oh, sorry. Let me drag it here a little bit better. Let me do a little this. So let's hit my 84. Right, so let's see here. 84. Okay. Here is 84 over here. Here it is. At this very level, 06670. So 06670 around this area. Here is my take profit, right? So remember how it works. I never place direct entries. I never place direct trades. I always place them based on sell stops or buy stops. In this case, is a sell stop that is triggered only when the price, right? Look at this. I placed this trade here. Okay, I mean, I cannot emphasize more about this. Never do direct trades. Always wait for the market to trigger your position, right? So here, I place it here in this when this very candle closed, right? Let's suppose that this one was not nearly triggering my position. So happened 1 hour, another hour, 3, 4, 5, 6. After 6 hours of patience, as I have always said, after 6 hours, this very candle activated my position. Activating my position. And from then on, right, after this position was triggered here, immediately the next candle, okay, came down, retraced a little bit, but look at this. My stop loss is my safe net. So the price never retraced that back to trigger or to hit my stop loss. And after that, the trade came down, retraced a little bit, but it was still a winner. Came down, retraced, but it's still a winner. And after that, came down. And here on this very moment here, basically here is the moment where I get my profits, right? So this is the way, and of course, remember that we have to take into account other important signals. For example, in the very moment that I entered, okay, I have to check the behavior of the other indicators. For instance, I mentioned that we need to check the MACD. Look at my MACD here, right? This is my MACD. Let me show you here. Look at my MACD. Here happens a very interesting situation. The red line crosses above, right, the blue line. This is a powerful indicator that is turning now into a bearish move, okay? So I analyze also, look at this, the behavior of what? Of my stochastics here. So my stochastics is showing me also that the red line is above the green line and heading downwards, heading downwards. So apart from that, I have MACD, I have stochastics, but of course, the most important here is not just to trade based on candlestick patterns. Remember, we always trade based on our trading plan. So if according to my trading plan, my strategy, the hammer is valid and the MACD and the stochastics are valid, I proceed. And I repeat, never direct market strategies. Okay, the only, at least the ones that I use are direct market only when I am trading with my red news, but they are not direct. I hit them and wait for the market to trigger the operation. Remember, we place either buy stops, sell stops, or buy limits or sell limits, right? That is something that I mean, I likely explained in previous videos, but in coming videos, I will be explaining furthermore, right? So my dear traders, thank you very much for your time. And remember, like, subscribe, and share. Thank you very much. Have an excellent, excellent day.